Okay, so this is just a recording of what I did earlier this morning regarding the British pound. I shorted the pound, as you can see here. That was based on the CPI report, the British CPI report that came out earlier this morning. Now I held only for a few pips. Again, in hindsight, I probably could have let it go a little bit further. I didn't think this one was going to go that far, so I think I had a little bit better reasoning to cut it short. I chose to pair the pound against the US dollar because there's been basically a little bit more confidence in the market. So money's been leaving the safe havens, and some of it has been pouring into the US dollar. Usually that would work in reverse. Usually the US dollar would be considered a safe haven, but recently that doesn't seem to be the case. So money's been flowing out of things such as, or currencies such as the yen and the Swiss franc, and into currencies such as the US dollar. And that's because the ongoing tension between the US and North Korea seems to be lessening somewhat. We'll see how that proceeds. Again, the market's been a little bit volatile lately. So anyways, yeah, I made a quick 10 pips here. Again, I've got to learn to let the second half of the trade run a little bit longer. I could have made substantially more. I mean, if I let it go till when I usually get up, another 50 pips. So something to consider. I could have moved it to break even easily. I was up like 12, 13 pips easily. Could have moved it to break even. Now, would I have been stopped out? That's the question. You know, another thing that I can consider is maybe not necessarily moving it to break even, but moving the stop loss up a little bit closer once I'm confident that the trend is going to resume, in this case downward. So that's another idea. So in case I was stopped out, I wouldn't be stopped out for as much as I would have initially. Anyways, have a good day, and see you next time.